Hello, everyone. I guess we're live. Let's just wait for everyone to come online. On stage. And
Everybody.
Great to be
Hey,
back
everyone.
here.
Great to be here as well.
Hey,
Likewise,
Neri.
pleasure to be connected.
Hey, Dennis. Excellent. We have Paul from BitPoker joining as well. And I think we can get things started. Welcome, everyone, to this ecosystem call number 4. Today we have special guests from 3 protocols building on Sapphire. So we have Bit Protocol, we have Midas, and we have Nebi. And I guess we'll best kick it off with some introductions. Not sure if it's needed for us too. So yeah, Matei here, head of partnerships at Oasis. But I think you know me from all the previous streams. Will, our head of ecosystem. And then let's give it to the partners. So maybe, Neri, you can start with Nebi, and then the Pro and Midas.
Of course. Nice to meet you all. Good to see you again. I'm the head of product in Navy and representing the end-to-end team here. Looking forward to this.
Can you hear me?
All good,
Yes.
Paul. Yeah,
I can't hear you.
So maybe that's a good start. So Paul, maybe you can introduce yourself.
Yeah, now we can't hear you.
Now we can, maybe Ali.
How's it going, guys? So really nice to be here. So I'm Ale, one of the co-founders of Bit Protocol. I'm more on the growth and go-to-marketing side, and we have Paul, our genius, our CTO. I don't know if he can talk.
Okay.
Let's put the mystery, right?
Yeah, Dennis, please.
I'll go next. Yeah, fantastic. Thank you for having me on as well, and appreciate the invite. I'm the co-founder and CEO of Midas. We're the tokenization project, tokenizing yield, and bringing it to Oasis Sapphire. So super excited to be on the call.
Yeah, thank you everyone for the brief introduction. Paul's having some technical issues, but hopefully he'll solve it and join us in a bit. But we still have Ali here from Bit Protocol to be able to answer some questions and topics that we have in store for you guys. So yeah, again, welcome to the whole community. Thank you for joining in. The intention is to kind of highlight a little bit the project that we're building on Sapphire, especially in the DeFi ecosystem that I believe is coming back in full force with the market going back to value. I think everybody's had enough of all the meme coin shenanigans, especially lately with the quick launches and rugs that were happening. I think that we can see that the sentiment is turning around, and we can see how AI is also turning towards DeFi with agents. So DeFi is clearly, keeping its position as the cornerstone of crypto, and it makes sense, right? Usually it starts with finance, right? People do stuff for financial incentives, and however better to get them than through DeFi protocols. Yeah. So maybe, Will, you kick it off with a few first topics.
Yeah, absolutely. So this is just, a general question for everyone. Maybe we can just go in a circle, but we'd love to know, what made you choose to build your product on Oasis, or what do you like about privacy, confidentiality, these types of things. Let's start with, Neri.
Yeah, for sure. I think that is a question we will discuss a lot of times, and always worth to bring it to the table again. I think the main reason why we choose Oasis is because in this space where privacy, security, protection against bots, when we combine all these features with a DEX, I think it's the best way to provide a secure and optimized trading experience to protect users for their daily basis, not only for the transactions, but also there are a lot of things that probably standard users are not aware, like front running and slippage, and a lot of things that usually happens when it's the first time for them, or even not, it's the first time. So we want to choose Oasis because of that. And I think in the future, confidential and privacy layers in DeFi will enable like private trading strategies for institutional users, anonymous on-chain order books, and a lot of things that I think it's the future. And we wanted to start putting Navy in this layer, so we are the main ones and the first one to start kicking off this kind of things. Even though it started a couple years ago already, I think position Navy in this goal. It's what we wanted to focus.
Yeah, awesome. Thank you so much, and I couldn't agree with you more. I think we have seen like institutions sort of signal that they want to see more confidentiality, more privacy. So hopefully that comes around soon. Paul, Ali, for Bit Protocol, it's a bit different. I know you guys took over a previous Vine community, sort of tried to rescue it. So you didn't have much of a choice of which network it was, but what was it that made you decide to take over that protocol? Was it the confidentiality aspects? Did you sort of believe in the vision of that product?
Yes, absolutely. We already had extensive experience with CDPs and other similar DeFi protocols. And when we heard about one on a blockchain that enabled it to have privacy features, we knew that it had a distinct advantage over most of the competition that set it apart. Because obviously in this market, there's many different forks of Liquidity and Prisma Finance on various different chains. And while each one of them independently has a good chance of success, depending on how they market themselves, having the ability to give privacy to users is just very distinct and something that you don't really see anywhere else. It allows not only for users to have a private stablecoin where they can store their wealth and protect themselves from market fluctuations and volatility, while still having the privacy and anonymity that you would have with other assets on certain blockchains, such as Monero, or even just holding Bitcoin or Ethereum or something like that natively on chain, without the need to worry about a third party custodying and managing their assets for them. But in general, we just saw it as a very good opportunity, as a way to bring additional features that people obviously demand and would like to have for an already existing product. And it enables, of course, bridging between chains as well, using privacy and anonymity features. So even though we only have privacy on the Oasis Sapphire network, because we're going to be multi-chain, when users bridge between networks, it enables us to give them privacy features using Oasis as an intermediary, so that when they bridge from one network to another, they can do so mostly anonymously, which is, again, a major feature for just bridging in general, but particularly that can be applied to the BitUSD stablecoin.
Absolutely, well said. Anything to add to that, Ali?
It's kind of funny, as you were saying, Will, we were not technically choosing Oasis, but at this point, we are understanding that Oasis cannot only be kind of a differentiator just because of the confidentiality, but also like the main unique selling proposition that we can have as a business itself can be like the cornerstone, not because of the functionality itself, but also we find like there are many institutions coming into this ecosystem of the stablecoins, and right now, lately, with these mixers problems and so on, we feel that these confidential stablecoins, right now we have this turned off, but in the plans are just coming back and turn it on, can really create some safe framework, not only for institution but also for individuals. And we're glad that start wasn't chosen by us, but right now we are paving our next steps, taking that into in the center of the strategy that we're bringing. So yeah, more than glad.
Yeah, Dennis, anything that brought you guys specifically to Oasis?
Yeah, I mean, I would relay topics around confidentiality and privacy is a huge important factor. And I would probably just highlight 3 experiences that we see. I mean, ultimately, I think number one, I don't see any blockchain tech to be scalable without privacy. I mean, when I use my bank account day to day, and this is ultimately the vision to use stablecoins to buy my coffee at Starbucks, and anyone can see, okay, I paid a coffee at Starbucks now, and I can see what I've paid for the last 15 years. That's just not a model that's going to work in practice. So ultimately, I think that's a very compelling reason when we think long term. The second one, and even more important than a couple of embarrassing transactions made in the past, is actually security. When we transact with users in Ethereum mainnet, some of them investing $1 million or more than this, they actually almost always create new wallets with no transaction history, with high levels of security using VPN and otherwise. And that is ultimately required. If you make transactions with that amount of capital, you need to ensure that and you're safe. I mean, there's many incidences, very unfortunate incidences, that you see at every crypto conference where people are exposed for wearing Coinbase merch, and that's ultimately the same reason. I think finally, it is important to overlay this with spam. I mean, once you have a wallet that has a good history, that you're gonna get sent all sorts of tokens. So on Telegram you get, or Twitter, you get all sorts of inbounds from illicit or unillicit actors that send you NFTs of all sorts of natures. And I think all of these three things combined. So I think ultimately scalability, security, and user experience.
Yeah, I think you raise important topics. Like in terms of security, we see a lot of also attacks coming towards people that are more publicly visible, and it's funny how they say information is the new oil. So everybody's taking care of their personal information. How, I mean, they're not taking care of it, but they are made more and more aware of how it's being exploited by all the big players. But at the same time, in crypto, we do everything on transparent chains openly, which can also be actually, used against you. So I would say that, for a real switch, real move towards adoption, especially by institutions, privacy is gonna play an important part, or just selective privacy. So you can reveal certain stuff to certain entities and not everyone else, right? I'm speaking to a potential partner that's working also more in the banking sector, and there is that's one of the key features that they need, right? It can't be that all the transfers of their users are seen on chain, right? It needs to be private. So I think this awareness is becoming more and more the topic in the whole space, and it's gonna just grow more and more. I think, Dennis, you're very well positioned with your products, right? And that are always more on the side of institutions, right? And bringing that institutional kind of products to the end users. I'm really happy to see what you're working on with the latest stuff that we'll discuss later as well. But how you're bringing all of that infra to on-chain infrastructures, and hopefully, in private manner in the future as well. So maybe we can continue, Dennis, with you, since I mentioned already the product that you're building, right? So maybe you can, I think everybody knows, MTBill and kind of what it is, and Basis is also pretty straightforward in terms of how the yield is generated. But maybe can you talk a little bit more about the liquid yield tokens that you just recently deployed, I think, on ETH mainnet. Hopefully we're going to get some of those on Sapphire as well in the future.
And be very excited to bring them. We'll be very excited to bring them to the Oasis ecosystem as well. So Thank you for the question. So I think we're an asset tokenization project, and for those that maybe haven't seen our existing products, we have an existing tokenized T-bill product called mT-bill and a tokenized basis or cash and carry trade called mBasis. Both of these are basically yield products that allow stablecoin holders to earn additional yield on their holdings. Now we've seen that yield is actually quite volatile. So when you look at the cash and carry trade in crypto last year, our mBasis product generated around 30% returns, but most of these returns were concentrated in March and November. So March and November specifically had almost 100% APY respectively, whereas in the months in between you had maybe 2 or 3%. And then that led us to iterate with some of our partners we've worked with us to bring so to call it all-weather yield strategies on chain. So we've launched a series of tokens together with RE7 Capital, MEV Capital, and Ash Capital. Each of them is managing a specific token strategy to bring on-chain yield that is constantly adjusting for the best opportunities. So in market appreciation, when the market is in contango, they allocate to the basis trade, and when the market is going down, they allocate to T-bills. And then when the market is in sort of this mixed term structure, they're allocating to a number of different strategies, which really their core bread and butter. So we realized that yield is very volatile. So we've partnered up with experts at yield, so these asset managers that do this for a living, and we've packaged it up as part of our product to deliver it to on-chain users in a compliant manner. So remember, our assets are ready to compliant, and in the DeFi first experience. So I'm excited to also at some point bring this to the ASIS ecosystem.
Yeah, thanks for that. I mean, I do agree fully here. What you're doing is really amazing. So here I think we can now move to our next partner. Will, maybe you can take over.
Yeah. So I think we'll ask Paul from BitProtocol next. But you mentioned earlier that it was because of privacy and confidentiality that you found so much potential here at Oasis. What do you think it is about confidential stablecoins that will have such a big impact on Web3? And if there's anything, is there anything else besides confidentiality that you think differentiates CDPs? Differentiates BitProtocol from other CDPs?
Yes. Oh, there's many things that differentiate us from other CDPs, but confidentiality in particular is just a natural thing that people want. While it's amazing that the blockchain is open source and publicly verifiable, not everyone wants everything they do to be public information, even if it's connected pseudonymously to their wallet address instead of to their name directly. Because obviously, if you go to the store and you want to buy something, private, maybe women's feminine products, maybe I don't know, a box of condoms, something personal, or maybe you don't want people to know what your eating habits are when you buy things. If that's all publicly on chain, they can see every time you make a transaction, every time you go somewhere and buy something, and who you're doing it with. That might not be the most appealing to a lot of people, and I wouldn't blame them. And that's a big limitation for the blockchain, unfortunately. People, they like to espouse how it's revolutionary, and it is, but there's still certain limiting factors and things that can get in the way of people just living their daily lives. And if we want people to use the blockchain to make these more personalized purchases and just go about their day, then they need some level of privacy and anonymity. And obviously many people would rather use the dollar or an equivalent thereof to make these purchases because they don't see it as holding its value long term, like they do with something like Bitcoin or Ethereum or other well-established crypto assets. So high privacy is basically a human right, as they like to say, and I believe that, and it's a necessity just for people to live their daily lives. Not to mention people who are obviously doing things illicitly, or governments who want to keep their information hidden from their their enemies for national security reasons, institutions that are doing large business deals that they want also to remain private. There's every entity needs privacy. It is a necessity, at least in some parts of your life. And if everything was just publicly on chain, that can really be very limiting in what people would actually be willing and able to do with their daily finances. Not to mention more important large deals and things like that. But Bit Protocol in particular differentiates itself from other CDPs in several ways beyond just having privacy on Oasis Sapphire. We have a very aggressive go-to-market strategy. As we've said before, we want to add exotic collaterals such as potentially meme coins, real-world assets, and anything else that might be of interest. AI tokens, whatever we think.
Hopefully MT below in basis, so we can collaborate.
Absolutely.
Well, do we just spoil it a little bit?
Yeah. Okay, well, I might as well just say it now then. Yeah, we were planning to add MT Bill on Oasis as one of the collaterals for Bit Protocol. I believe that's a large part of what this meeting kind of was about. But, absolutely, it's a real asset. We think it's makes perfect sense. It'll bring a lot of stability to our protocol, both in a functional sense and in terms of revenue. And I think it's an amazing asset to add at this stage in the game, for sure. No questions asked.
Okay. I mean, we'll get back to MT Bill later. I want to make sure Neri gets his chance to talk about Nebi and what we got going on there. But yeah, we'll get back to talking about MT Bill and Oasis. I mean, and Bit Protocol and how the whole ecosystem is going to work. But Neri, I want to know just going backwards a little bit. What do you think makes like DEXs a cornerstone to any Web3 ecosystem, and how are you looking to work with other ecosystem projects, to help support them and partner with them and things of that nature?
Yeah, that is a very interesting conversation between Paul and Dennis, and I think I will take that as a bridge to connect your question, Will, because we think that DEXs are the backbone of any Web3 ecosystem, not only here, because we and all DEXs provide, or they should provide, the essential infrastructure for permissionless trading, liquidity provision, and on-chain financial innovation. So there are three things that I like to highlight, which are financial inclusion, the no dependency of centralized exchanges, and liquidity and accessibility, which with financial inclusion, I mean every single person with access to the internet can participate in DeFi. You don't have to rely on someone else to access to these ecosystems. And unlike centralized exchanges, we, like DEXs, enable users to trade directly from their wallets, maintain self-custody of assets, and avoid counterparty risks. We all know for many bad examples what happened in the past with other centralized exchanges, and what are the risks of holding our assets into others' platform. And I think the main reason of why it's DEX are the backbone of any Web3 ecosystem, it's also because of the liquidity. Well-functioning DEX, in my opinion, ensures that tokens within our ecosystem are very easily tradable. So all the partners that we are sitting now here in this table can be provided to different users, retails, even institutions through a DEX. And that is pretty much what we want to do, and we want to connect. And our commitment is to support every project launching in Oasis to be accessible through Navy.
Yeah, absolutely. I think you nailed it on the head in terms of where DEXs are, positioned within, sort of creating synergistic relationships between all ecosystem projects. I think on the Oasis side, do we maybe want to announce now, Matei, or how do you want to?
Yeah, I mean,
No pressure.
no, I mean, yeah, we're definitely going to be working on some of the let's say TVL on Sapphire, utilizing protocols within the ecosystem. As you know, with the growth of the ecosystem, we also see a lot of benefit that any user can get, and the foundation is here as one of the participants, right? So with the MTBuild collaboration, right, we're deploying capital into MTBuild, and it's definitely beneficial for us, generating yield. Obviously, we want to support other ecosystem projects as well with a little bit of liquidity that also brings value back to us. So I think it's just it makes sense for the foundation to also be one of the actors in the ecosystem. So we will be dedicating a portion of the treasury that the foundation has towards the ecosystem projects, to help them grow, to also provide some more liquidity. So yeah, we're dropping quite a few bombs here today at the ecosystem call. I think it's good. So the collaboration, I think, with Protocol and Midas is going to be great, for people to be able to have a less volatile asset, to hold this collateral with the addition of, additional liquidity coming into Nebi, Bit Protocol. Midas is also going to help with the users, for their trading, because slippage is a real thing that nobody wants to have and everybody wants to avoid. And as Neri said, right, DEXs are the cornerstone of ecosystem, because we in real life we also continuously trade, buy sell, but in essence that's kind of trading, and crypto is all about tokenization of all the assets. So yeah, I think this is the path forward that needs to be done, needs to be taken. So yeah, I'm very happy that we're moving this direction. Maybe, Will, your thoughts on this as well?
Yeah. I would say I'm just excited. I think that it took a little bit of logistical organization to get all the parts in place. We had to get our treasury set up with Midas and MTBuild. We had to coordinate with Bit Protocol to get them to accept MTBuild as a collateral. We had to coordinate with Neri and Nebi, to set up which pools we think will be the most beneficial. So it's taken a bit of time, and we know that the ecosystem has been asked, or the community has been asking for it. But I think it's really just exciting, and as you said, it's just going to create a more fluid sort of user experience, getting in and out of the ecosystem, getting between assets in the ecosystem, getting between protocols in the ecosystem, everything. I guess where I would want to go here now maybe is a question for you, Dennis. What does setting up, let's say, an MTBuild BitUSD pool on a DEX mean for MTBuild, and likewise, what does it mean for Bit Protocol to accept MTBuild as collateral? How do you see that benefiting your protocol?
Yeah, I think they're both two very interesting use cases. First, let's maybe start on history. So Midas is tokenizing these assets in a regulatory compliant manner. So we have regulatory authorization in Europe that complies both with securities and crypto and AML regulations. So this is sort of the starting point. We put these assets on chain, and we can deploy them on different chains. And from there onwards, these are tokens that are designed to be so-called permissionless tokens that are open and composable in the respective ecosystem. So it's possible to develop peer-to-peer functionality, for example, that you use this as a collateral in a similar token standard for stablecoin. I think that's a super exciting value proposition. When you think about it, the stablecoin is backed by many assets. I mean, the most widely adopted one, USDT, is backed by T-bills, or supposedly it should be. And we can provide our T-bill, tokenized T-bill solution in a very efficient manner to provide that infrastructure. Now, even better, I mean, we have other yield products that provide market neutral strategies, for example, MT-Bill or MH, that could also be a collateral for stablecoin and are also dollar denominated in that usual, or will generate potentially higher returns. So there's a spectrum of use cases that allowed for collaboration. Similarly, this can be used in the lending protocol or in DEX. Oftentimes when you have integrations in a stablecoin, you need to make sure that you have a way to dispose of bad debt. So bad debt is when potentially there was a default of the T-bill, so that there was a default of another collateral asset. It could be a meme coin, it could be another instrument. And in this case, you need a way to liquidate these assets, and DEX can potentially provide this as a route where effectively there's a trading pair from one asset to another, or it could be done by primary or normal peer-to-peer transaction, where oftentimes the debt is auctioned off. So we really like what we do because we really like this ecosystem because it allows for composable use cases and really focus everyone on what's their bread and butter. We couldn't build a DEX, we couldn't build a stablecoin. These are things that are in their own right very hard to do, but we're quite good at all things asset tokenization. It comes from the regulatory side, it comes from the asset securitization side, making sure this is certainly secure, safe, it pays the yield that users expect, and compliant.
I don't want to say, because of the bad connotation with the whole Luna blow up and the UST, right? But having MT-Bill as collateral, and then if the borrow rate on the BitUSD is lower than the yield on the MT-Bill, right? You have a self-repaying basically loan, right? But I know that has a bad connotation from the past, right? But here we have real assets backing that yield, right? It's not just commissions.
There's a big distinction to make from what you've seen in past cycles of being algorithmic stablecoins and asset-backed stablecoins. So you can debate the nature of these assets. So what is the counterparty risk that you involve in these assets? So T-bills is seen as a very low counterparty risk asset when you have ultimate creditor being the United States Treasury Department. You have other assets that come into the mix. When you talk about crypto assets, you see delta neutral strategies and otherwise. They certainly involve more credit risk. That's not a secret. I think users should be aware of that. But it's about an instrument between risk and reward. So how much more reward you get for additional risk, and sometimes this can be a very interesting proposition.
One quick question before, I know we're hanging on this topic a little bit, but I'm just curious, how you're seeing from your side, because you also have your M-Basis, which is similar to, let's say, Athena product. How do you see this, potentially? Is there a potential for an unwind in a bear market? What are the risks there, if you can comment on that?
So the basis trade or cash and carry trade, the main risks are number one, counterparty risk. So you have, for example, the centralized exchange going down. That's potentially mitigated by using off-exchange custodians. There can be execution risk, or finally there can be market risk. For example, in certain market environments, when Bitcoin or other assets depreciate significantly in value, and this is likely to happen again. This happens every cycle. Bitcoin will go back to 70K at some point. This is not a prediction, but just a hypothetical guess. Bitcoin will go back to 70K, then we learn that MicroStrategy will get liquidated and that unloading a lot more to the market, and then Bitcoin all over suddenly is 50K. And this market environment, you find that the funding rate flips. Instead of paying a positive and return to the short holders, they pay a negative. And that usually requires unwinding of these trades, and that results in negative. That is actually, from our perspective, baked into the product. So once these products turn negative, you withdraw the position and protect your dollar exposure. And that's why the active asset manager, Edge Capital, that manages strategies doing this day in, day out. So this is really the most important consideration here.
Yeah, thanks for that. I mean, it's just one thing, where people were comparing this to the previous, algorithmic stablecoins, and obviously it is different, but there is, still some risk in the market in terms of, how the unwind happens when the funding rate flips. I think TNET, if I'm not mistaken. I think they're also taking into account yield generated from ETH staking, if I'm not mistaken, right? So trying to offset potential negative funding rates through that. But still, yeah, we'll see how things. I'm not funding the team. It's just
no. I think Ethena has a great product for to do. It's different when we do. So we don't try to be a stablecoin. We really try to be the yield-bearing asset, and that yield-bearing asset is managed by institutional asset managers. So there's a different category. So we're not an asset manager. We don't have licenses. I don't know if Ethena has licenses to manage assets. That's a question to them. But from our perspective, we really just provide the building block of this, and we partner with the best class to provide these assets. So every opportunity carries risk, but I am a huge fan of what Ethena has built, and there are many pros and cons to dig into details.
Yeah, I mean, it's interesting to see all the developments around the stablecoins this cycle, and yeah, especially with RWAs coming more into the forefront. A little bit of my curiosity coming in, but yeah, Will, please, if you have any.
It's good. We all just got like a nice, I don't know, summary of how Delta Neutral strategies work in crypto.
Yeah. So. Well, there's more to uncover, but I think the important thing is they truly are quite different than algorithmic stablecoins. But the most important thing to remember is the risks. Risks come in two kinds, and there's one. Risks you can identify and risks you cannot expect. So expected risk and unexpected risk. So it's very cool to think about risks that you can mitigate and expect, but the thing that usually catches you are the unexpected risks. And they will be very obvious when they come.
So going back to our, I guess original question before we had the tangent. I'm sorry, Paul and Eri, you guys have been on the sideline for a little bit.
No worries. It was very interesting.
But yes, so maybe my next question is for you, Paul. How do you see working with MT-Bill and Netty? Why are they both so sort of critical for Bit Protocol? Why is MT-Bill a good collateral? And why do you need sort of this MT-Bill pool on Netty? Why does that help you guys, maybe with liquidations or just in general stability of the protocol, that sort of thing?
Yeah, absolutely. As you know, a DEX is a critical piece of infrastructure for any blockchain, like Neppy said before. For our protocol, everything has to do with the stability of the liquidation margins for the underlying assets being used as collateral. As long as all assets that are being used as collateral can be sold for equal to or greater than the USD value of BitUSD tokens that are being used, that are being borrowed against them, our protocol will remain solvent. So liquidity is critical for the stability of our CDP stablecoin. Does it make sense? So basically, as long as we can sell whatever is being used as a collateral for at least $1 relative to the amount of BitUSD that is borrowed against it, BitUSD will always be backed and it'll always have the value of $1.
So for basically, the more BitUSD pairs there are, the more liquidity there is for BitUSD, the better, right? Exactly.
The more liquidity there is, the easier it is for people to sell the underlying assets and convert them into other equivalents and do the arbitrage as necessary to keep BitUSD stable. So liquidity is extremely important for any asset that we would add to our protocol. And that's why certain assets we've been considering, unfortunately, have not been added to our protocol yet. We were looking at some meme coins on Oasis, such as Rosie, but it simply doesn't have enough liquidity yet to be a viable option. But that may change in the future. Regardless of that case, because of that, assets that don't fluctuate very much and assets that have high amounts of liquidity are both very beneficial to our protocol. in the case of MT bill, because it should be relatively stable against the dollar because it's tokenized treasury bills, and it should just go up slowly over time against the dollar at rate of like 4% or whatever the interest rate is currently. Basically, when it's used as collateral, it'll significantly stabilize our system, because right now, while BitUSD has been able to maintain its peg of $1, we've seen very wild fluctuations in the price of Rose over the past few months, going from over 10 cents to 3 or 4 cents per Rose, and that caused a lot of liquidations, a lot of redemptions to occur in our protocol, which significantly reduced the overall amount of collateral that is backing BitUSD in terms of dollar value. So having a more stable asset like this being used as collateral, it's much less likely that any sort of major liquidations or anything like that will occur in the same capacity, at least regarding MT bill. Now, of course, redemptions can occur using any asset in our protocol. So if you do use MT bill to borrow BitUSD, while you don't necessarily need to worry about being liquidated directly, if you don't have a high enough collateralization ratio, you may be redeemed against. But you're essentially selling MT bill at a 1-to-1 rate for BitUSD when those redemptions occur. So there shouldn't be too much to worry about in terms of maintaining the value of your position.
Yeah, absolutely. Yeah, so I think you gave a great breakdown of where liquidity is important for Bit Protocol, and also why MT bill is sort of, I wouldn't say a better collateral source, but let's say a great second option as a collateral source compared to Rose or State Rose. It has sort of a different risk profile and therefore gives users more options. For Neri, you listen to Paul just talk about why liquidity is so important for his protocol. Maybe you can talk a little bit about Nebi and your concentrated liquidity model, how that sort of works for Oasis.
Yeah. Sorry, I didn't want to interrupt. Will finish the question. Apologize.
Oh, no worries. I was just asking if you could talk about the concentrated liquidity model and sort of how that works on Oasis. Maybe talk about how you see, why you see concentrated liquidity as being important for any DEX.
Yeah, I think I can agree more with what Paul was mentioning about liquidity. It's crucial. But if I had to, let me explain our model of concentrated liquidity and go one step deeper about what Paul was mentioning. So we all agree with liquidity being crucial for every single project deploying in a blockchain, right? So, but what if that liquidity it's even more concentrated in a range that is needed? So what we wanted to provide with Navy is not only the possibility to our users experience good liquidity, but unlike traditional AMMs where liquidity is spread across all price levels, our technology concentrates liquidity wherever it's needed most, reducing the price impact for large trades, which is usually what the users complains about when they experience higher slippage. So we want to make the capital utilizations more efficient, and liquidity providers, in this case, earn higher returns because their funds are used more effectively rather than just being stretched thin across the entire price curve, if that makes sense. So what is, if I had to say, combining this, the liquidity itself with this technology model, the result, it's a better price for traders, higher yields for liquidity providers, and stronger liquidity depth for the entire ecosystem, which is pretty much what we are trying to achieve with our platform.
Yeah, absolutely. And I think, we can go into so much stuff on this call. We could go into why that's useful for like flash loans for liquidations and
Totally.
protocol and stuff like that. But I don't know. Maybe that's too much into specifics for this call. I don't know. Matej, do you have any questions? You want to take it away?
Yeah, I mean, I am curious about one thing, right? So when you're doing, when you're involved in the project you have, it's everyone's working on a specific subject, right? CDP stablecoins, collateralization of real assets, right? And the DEX. How can you manage here to stay in the meta, right? That it's so ever evolving. Like we went from meme coins being the greatest thing to then AI agents, which were mostly just more or less chatbots on Twitter. Now agents are transforming a little bit more, but it's difficult. Like DeFi is always there, but a little bit more in the background. So how to stay on top of things? How to stay relevant? Is it to be fast with all the latest? I mean, including all the latest, coins into the offering. How you see that, and what are the kind of the plans for 2025? What are the metas that you're anticipating? How you're kind of working towards that? Open question for anyone. So if anybody wants to take it.
I can add a couple comments on that one. As I say, I try to keep myself as summarized as possible. It's a very interesting conversation. We can keep talking about this the entire afternoon and night. But AI was one of the 2024's biggest narratives, right? Like we all agree with that. And in 2025, I personally expect AI models to become deeply integrated into blockchain ecosystems, particularly in DeFi, with security and autonomous trading. And we need to start thinking on how AI will shape crypto, right? So, which is something important. We have many topics like smart agents, optimizing liquidity, on-chain AI monetization. So the centralized AI models will require on-chain payment, for example. Privacy preserving AI. So Oasis, I think privacy features will play a really crucial role in AI-driven financial tools that can operate securely without exposing sensitive user data. So there are many topics that I think it's putting everything not only Navy, that all the projects we are working together to keep growing with Oasis, putting into this trend that is growing. And I think our main challenge is always going to be the same, how we adapt ourselves mentally and also our products to keep us in these changes. So because we have to adapt ourselves, we have to iterate our products. What happened in the last summer of 2020, 2021, that it was proved that on-chain financial products could rival traditional finance, but unsustainable incentives and weak risk management led the sector to decline. So in 2025, I expect DeFi to resurge, but with more mature and capital efficient models. And I think that is what has to be on our keyboard every morning we wake up and take a read of that, because adapt to the market conditions. It's always important for us to keep us growing together. That's
one quick follow-up question, Eric. I heard our engineers say that now they need to build in a way that's not just dev friendly but agent friendly as well, like agent friendly APIs and stuff like that. Are you looking at that as well? Like if we believe AI and agents are gonna be part of a lot of the flows, do you need to adapt your tech a lot to be able to be utilized by agents, or you think they will adapt to the existing tech?
I think it's our best long-hanging fruit. When we start building Navy, we knew this coming, and of course things are always needed to be adjusted to what the market is needed. But I think this is our main USP, that our technology is going to be ready to accept and adapt all this kind of AI agents coming in. Which is something we are very excited. We were investigated already, and we are brainstorming about this every time. So I think it's something we are prepared, and we are really looking forward to see how the AI is shaping the crypto and blockchain ecosystem.
Yeah. Any other comments from you, Paul or Dennis, on the topic?
I mean, I think I can't add on this topic specifically beyond what we've discussed. I think there's clearly a lot of overlap, but really focus on traditional tokenization products. So we have not incorporated any AI agent or otherwise in the investment strategies, but we are monitoring whether this is something we should do.
Awesome, thanks. Paul?
Yeah. As I said before, we hope in the future to incorporate AI mechanisms into our protocol, and allow AI agents to interact with our protocol and use it to borrow collateral that may be necessary for them to function properly. One of our long-term models is to basically subsidize AI agents when they're first created and they need capital for their operations. But this is most likely for the time being, it'll be in the form of something like AIXBT depositing its own token into our protocol and borrowing BitUSD against that. But we definitely have been investigating this topic in depth and are considering many different ways to expand our involvement in this ecosystem and into these growing aspects thereof.
I mean, that's really great to hear from all sides, because we are also internally working on something that is more in the DeFi AI space, DeFi agents and all that. So yeah, keep your ears close, more addressing the audience now to find out more. But yeah, we'll be launching something quite interesting in the DeFi AI agent space soon. And I think it's great to hear that we agree that DeFi is making a comeback, right? And it's going to be paired with AI, and it's not going to be AI meme coins, but rather DeFi AI, right? Which I think will bring more value to the whole community, and a bit also, for people looking from the outside, a better image of what we had now with all the meme coins and crime happening left and right. We need to restore a little bit of the image of crypto, that it's not just all about the wild cannons and the wild west, but you have serious products, serious finance happening here that actually can compete with TradFi on many levels. From my side, we're coming up on the hour. This went really fast, so I hope our listeners or viewers are still with us. But yeah, I think this was really enjoyable. There was a question, I think, from the community around the little snippet around the treasury deployment that we mentioned in the call, about what assets and what pairs liquidity will be put in. So there's going to be, definitely on Nebi, we're going to be creating some pools that include BitUSD, MTBIL, ROSE, to help with a little bit with having better liquidity for the users to be able to trade within the ecosystem. We are already deploying our treasury in MTBIL. So MTBIL is already live on Sapphire for bigger orders, but I think, Dennis, we can mention here that soon you're going to enable redemptions and commitments on Sapphire for the whole community from $1 up. Is
exactly,
there
and instant issuance and redemption is an important feature here.
Perfect. Yeah. So that's coming really soon, and I'm excited for that. That anybody in the ecosystem will be able to get exposure and then put it on Bit Protocol and borrow BitUSD against it, right? And have that composability that we mentioned before. But yeah, this is all coming very shortly. we're sorting out some technical stuff, and just follow our channels for the announcements when things go live. Any last thoughts, from your guys or from you, Will?
No, I mean, yeah, I would just say that it's great to see sort of the ecosystem coming together in this way. I think we understand that, it took a little bit longer than we would have liked, but I think it also shows like the commitment that we have at Oasis to making sure that, we set things up in the right way, that we are always, making sure that we're secure. We have the community and the ecosystem's best interest in mind. We wanted to make sure that there is the right oracles in place, the right infrastructure in place to make sure that everyone was safe. So I'm just excited that we're finally getting to that last step, and hopefully we'll have this liquidity deployed soon. And I think that will massively improve the user experience, moving between the different ecosystem products and in and out of the ecosystem as well.
Yeah, thanks for that. We got one more question from the community on the timeline of the deployment. It's going to be soon, probably next month, since we're closing in on the end of February. It only has 28 days, so yeah, we're almost there. But yeah, probably in March things will be rolling out. So yeah, stay tuned. If there aren't any other, did anybody want to share their last thoughts as well? Dennis, Paul.
So, thank you for the opportunity, and super excited on the collaboration, and looking forward to the next ecosystem call or event in any of the next conferences coming up. So I'm extremely excited.
Definitely. Great that you mentioned, right? Next week we're at Denver. Will's going to be there. Me personally not. So anybody that's flying in there, or is US based, definitely go say hi. We have the afternoon tea party. I think we're also going to have a booth at the main conference. So plenty of opportunity to meet the team. We always love to connect with our community, potential new partners. So yeah, drop by, say hi. We'll be waiting. Paul, Mary, any last thoughts?
Just thank you to everyone. Will, Mate, it was good to meet you in person the last conference. Unfortunately, we'll miss the next one. And thank you all for the Navy community that I see a lot of familiar faces here in the chat, and also to Dennis and Paul. It was very interesting, guys, listen to you both. And I think what we are building together, it's going to take Oasis to the next step. So very looking forward.
Amazing.
Yes. It was very nice meeting all of you. I will not personally be at ETH Denver, but multiple people from Protofire will be, and I'm sure some of them can meet with you while you're there. Will or anyone else who might participate or attend the event.
Awesome.
Absolutely. All right.
I would just like to invite everybody to follow Nebi, follow Bit Protocol, follow Midas. Check out their projects, their dApps. Try them out. See how it goes, and follow us for next steps, and to be in the know what's happening within Oasis, what we're building on. Again, thank you everyone for joining today. We're at the 1 hour mark, so yeah, let's wrap it up. Thank you guys also for joining the call, Dennis, Neri, Paul, and see you on the next one.
Appreciate, Matthew. Well, thank you very much. See you in the next one.
Bye, everybody.
Bye, everyone.